or any of these other things are trying to solve a completely different problem. And Mark, if I remember correctly, at the beginning of the conversation, you said, look, Bitcoin has no competition from a store of value standpoint, but it's just these other platforms that are, quote unquote, further ahead in terms of serving various applications. Is that kind of a fair summary of where everyone is?
What you left out was that store of value, being good at store of value, acts as a boat anchor for everything else, because people want to use it for that. It also opens up the door for other applications to do what Bitcoin expects to do. Because again, I'll use Axie Infinity. And look, there's lots of things right and lots of things wrong about what they're doing in the Philippines as an example, right? But the people in Philippines aren't clamoring for Bitcoin. They're clamoring for SLP, right? And they're clamoring to get sponsors to play Axie Infinity, because that's the organic currency that they can earn. And that currency, isn't necessarily a currency, but it can be distributed organically because they actually create it themselves. So the point being, you're going to be competing with a lot of other platforms for a lot of different applications. Now let's take it one step further. Let's just say, all the things that have happened with fintech get disintermediated by DeFi. All the things that we've seen with smart contracts, with NFTs, get applied to any number of other applications, so that there are 2 or 3 competing other platforms that people are using and buying those tokens for, because they need to use those applications.
So Mark, this is a really interesting point, because I think that most people don't make the analogy, but I would go as far as to say what Axie Infinity is doing is analogous to, let's say, Uber early on paying drivers and riders and kind of subsidizing growth. At some point, if that subsidy goes away, is your belief that the audience or the user base will kind of move on to the next thing? Or is the thought process that these applications will attempt, similar to Web 2 technologies or platforms, to build enough of a network effect to stay and hold people without having to continue to have that subsidy?
Depends how big the gets. So the game for Axie Infinity is if they get a big enough community that people, by advertising, they sell intellectual property outside the community, so that external money comes in, and then that external money is enough to support the gameplay and the subsidies can leave, they win. That's the bet.
Got it. And so I guess the big question is, if you think of the Bitcoin network, mining obviously is a subsidy to some degree to get people to come onto the network from a mining standpoint. Really what El Salvador is doing is, with the state-backed fund, they're creating a subsidy as well to get Bitcoin into people's hands. Your point, I think, is just, hey, how much do they actually need via either mining it or buying it in the market to seed into their economy in order to actually get the network effect, where then the government can kind of take their foot off the gas pedal and the people then now use Bitcoin in the economy without that subsidy?
Almost. Because the problem is, if you get the network effect, there isn't enough Bitcoin that can be mined within El Salvador. So the perfect scenario in my mind,
it's infinitely divisible, though.
No, that's not the issue. Of course, it's infinitely divisible. All cryptocurrencies are at least 18 decimals divisible. So that's not the issue, right? The issue is, if they grow, the perfect event, that's what I was talking about. The perfect scenario is they can mine enough, the government can mine enough Bitcoin to pay all their bills organically in Bitcoin without ever having to purchase dollars or any other currency to use that to buy Bitcoin. That's the ultimate, because at that point in time, the whole economy is run and managed by Bitcoin, because so much of the employment is government based. Then the people that they mine the Bitcoin, they pay their employees in Bitcoin. Those people buy their coffee in Bitcoin. You don't need to be dealing with all the exchange fees, and you don't need to be dealing with the currency translation fees. And you probably need to transfer from Bitcoin to some other USD or some other fiat. Or
so much as a circular economy at that point.
Yeah, it's self-fulfilling economy. But if they can't, and
Mark,
the demand is there.
just the thing to keep in mind, though, is that since Bitcoin works with proof of work, you need to have energy, and not all countries have large energy silos that they're able to trade. So they need to be able to trade other goods and services for that Bitcoin. And just because they're not able to generate, if they're energy poor as a country, doesn't invalidate the thesis, since it's not a full circular economy if they're not mining on site. They can trade goods and services for energy that's being produced in Texas, right?
No,
you can have miners in Texas generate the Bitcoin, and you trade the goods and services to bring that Bitcoin into that economy.
that's fine, but it's going to be priced on dollars. But let's just say, for the sake of example, they can buy some percentage of their goods, and they can buy some percentage of they can barter for some percentage of their Bitcoin in El Salvador using goods and services, right? I forget what their number one resource is, but let's just say they only sell that for Bitcoin, and that increases the amount of Bitcoin that they have available to them organically. The more the demand for Bitcoin, if that demand for Bitcoin outstrips the availability, the organic availability of Bitcoin, then you have effectively a QE set of circumstances where they have to go out there and figure out a way to buy a currency, most likely USD, in order to buy more Bitcoin to satisfy the demand. And if they have to buy more Bitcoin to satisfy the demand, what happens to the price of Bitcoin? And if the people who are holding Bitcoin keep on holding it, given that there's a finite supply with no inflation, you could get to a point where everybody just arbs the shit out of El Salvador by saying nobody sell, right? Which you hear a lot in Bitcoin anyways, and the price the price inflation accelerates more dramatically than they can afford, and they have to go away from Bitcoin.
And then all citizens that are holding Bitcoin in their account or have chosen to denominate their savings in Bitcoin are upset.
No, but the rest of the world is happy, but all the people who couldn't afford, because you talk about me not being able to relate to people who can't afford to save anything. What do you think all those people in El Salvador who don't have the ability to save are thinking? And what they're saying?
They're probably thinking I need to get my hand on a smartphone or get my kids to get a smartphone so that I can start denominating my savings in Bitcoin.
Again, this is another myth. If you had Michael Peterson here from El Zonte, that's one of the things I thought when I went down to El Salvador. I thought people wouldn't be able to save because they don't have any money. And he actually explained, no, it's actually all relative. Whereas we might be sitting there thinking, oh, I'm not going to buy that TV because I want to buy Bitcoin and save. People in El Salvador, down in Zonte, what they're doing, they might not be buying a can of Coke or a beer and they're saving. But people in El Zonte who are, it's a third world country. Some of the poorest people are starting to save. There is that one guy, I can't remember his name, he was just gradually saving bits and bits of Bitcoin over time, and he eventually got his teeth done, and he's buying a cow. And it sounds funny, but it's the truth. Is that the reason they don't save is they had no incentive to save because their money wasn't appreciating in value, and they didn't have the technology to save because they didn't have bank accounts. So even the poorest people now in El Salvador are starting to save. So sorry, that's just another myth.
Okay, first of all, anecdotal stories are amazing. You can't take.
No, it's true. People are now saving there. You speak to Michael Peterson.
I believe you. 100% believe you, but you have to look at it on a macro basis. And the people outside El Salvador will benefit more. So let me change it as a question. Are there going to be more Bitcoin holders outside of El Salvador or inside of El Salvador?
What? Of course, outside of El Salvador, because there's 6 million people there and there's 8 billion on the planet.
They're the ones that are going to be playing the ARB game saying, okay, now we're looking at the payments that the El Salvador government has to make. We see that they're bartering from Texas, right, to get Bitcoin to pay some of it, but they're going to have to buy, because I get this all the time and you guys hear it all the time. So-and-so is going to buy X hundreds of millions of dollars of Bitcoin for their treasury. So let's buy now because the price is going to go up. So-and-so, there's going to be an ETF. So let's buy now because tomorrow this ETF goes gold, hopefully, and more people are going to buy. When you all of a sudden find out El Salvador has $100 million in bills they have to buy Bitcoin for, what do you think is going to happen and who's going to benefit?
So, Mark, what is your thought process? A couple of years ago, I think it was Pierre Rochard wrote a piece talking about like a speculative attack on Bitcoin. You could look at something maybe like a Michael Saylor has done, where he's basically borrowing money at incredibly low interest rates that depreciates, rather rapidly, converts it into Bitcoin. So he's trading, kind of bad money for good money, if you were to ask him about it. And a nation state obviously has the ability to print money. El Salvador doesn't because they're dollarized. But if there was another nation state that got in this situation and they just said, rather than go to the market and buy Bitcoin with the dollars on our balance sheet, we're literally just going to print, 500 billion, $1 trillion of our bad money and convert it into Bitcoin in one big purchase. Is that a viable path for a nation state, or is that going to be kind of front run as well?
I think it's a viable path, and I think they do it differently. They'd go and buy as much hash rates as they possibly can and threaten what they couldn't buy. So China made a mistake by kicking them out. They should have kept them in and kept control of them like they did with all the other technology.
Agreed.
So if China gets enough hash rate so they can get to 51% and say, live or die, there goes your family, what happens to Bitcoin if they get to 51%?
Yeah. Well, now they're down, sub 5% on a global basis. The US is the leader with 35% of hash rate as of right now. I guess, and I just want to bring it full circle because this all started with the thread Avik wrote in the National Affairs article just saying, hey, America should embrace Bitcoin. What's your take on what should America do? Is it just allow the free market and kind of private participants to, play it out? Should the US actually do something here?
Yeah, with Bitcoin, they don't have to do anything. They just let it be. It's just a store of value like gold. And look, one of the great lies of gold is that it's physical ownership. Nobody, other than people who own coins, nobody owns physical gold, right? It's just a digital transaction on a ledger somewhere. And then it trades in the futures market and people settle. No one physically owns it. It's actually not, from that perspective, it's not all that different. Maybe not Bitcoin 100% analogy because of the inflation rate difference, but the fact that there is no inflation in Bitcoin. But the reality is, there isn't gold being delivered very often except for industrial and jewelry applications.
That's because it's expensive to do physical settlement, unlike Bitcoin.
Well, yeah, it's expensive, but there's no reason to do it. It may be expensive, but so what? No one's going to do it.
If people thought there was going to be a run on gold, they would want to own physical gold.
Doubt it. Well,
no, I agree with you, and that's why I don't own it. But
people runs on. The myth, the person, the legend. It's all around gold, just like a lot of the stuff you guys are talking about now on Bitcoin.
Well, Mark, if I may, you mentioned Solana earlier, right? As these other currencies and these other platforms, that's a different market structure where you have a large amount of VCs coming in and backing something at an early seed round, being able to get tokens before they're ever publicly available at 4 cents. And then it gets listed on an exchange, and then exchanges have massive abilities, basically from a market dynamic, to basically effectively dump on retail, right? It's a bit of a different market structure in that sense. And additionally, Solana had to have a bunch of node runners meet on Discord because the chain broke. And all of the complexity we're talking about for these elaborate features that differentiate away from Bitcoin are Achilles' heels and introduce centralization again, which, if the whole innovation here is that we've solved the Byzantine general problem, we've actually brought decentralization here. The idea that you have to have this elite class of people who have privileged access to the network who actually truly set the rules. It doesn't matter what other bells and whistles you have on top of it. All of the complexity is a liability when it comes to actually doing the computation and the actual innovation. And that actually is a detractor away from everything else.
Okay, so let me respond to that. So first, like I said in my tweet storm, that there are a lot of blockchains, L1s and L2s, and a lot of them are going to go belly up. It is a death war right now. But you're wrong when you say that Bitcoin doesn't have those complexities, because there are assets like wrap Bitcoin. And those assets are being held simultaneously and traded and fall right within those same ecosystems.
But they have custodians. They're centralized. That's the exact trade-off. That you lose the decentralization, and with the trade-off of becoming centralized and a custodian holding that WBTC on your behalf, you can do all the crazy things you want, but you just reinvented modern banking all over again. There's a custodian.
Yeah, no question about it, right? I agree with you there. But again, look, Solana is a bad example because for a lot of reasons. We don't need to litigate Solana, right? But there are good ones, right? There are ones that are working well. And that, again, I'll keep on repeating this. Right now, what's happening, I'll go from the consumer perspective. And a friend of mine, a good friend of mine that I respect a lot, and I used to go back and forth in this all the time. You have to look at it from the consumer perspective. Consumers are going to find applications that they really like and that are easy to use, right? And where those applications are hosted, they're going to be the winners if they're able to sustain themselves. And it doesn't matter what we think about Bitcoin. It doesn't matter about the decentralization. Even, okay, I don't want to get everybody all hyped. So I just made a bunch of people's blood boil by saying it doesn't matter about the
It
decentralization.
sure did.
Yeah. Take a step away from that, right? So what I'm saying is the consumers don't pay attention to the intricacies. I was listening to something and they were talking about don't sell the recipe, sell the brownie, right? The consumers buy the brownies. And they focus on the brownies that work for them. They don't think about the recipe at all. And so if enough people are buying different brownies and love the brownies, and those brownies may not quite as decentralized as you would like, they're going to ignore that fact and keep on buying those brownies. Stupid analogy, but lots of people will tweet that that's a dumb analogy, but that's the best I can think of.
But Mark, I think that there's a hint of truth here, right? In the sense that the Bitcoin community points at Ethereum, let's say, and says, hey, Ethereum's not as decentralized. There's a bunch of incentives that are going to make it more centralized over time. We saw over the last 12, 18 months, Binance Smart Chain pops up, much more centralized than Ethereum, according to the Ethereum community, but faster throughput, cheaper fees. Some developers, not all, but some developers moved over, and you could argue that they didn't care about decentralization because they just wanted faster throughput, cheaper fees. You then see Solana, yada, yada, right? So there's a whole bunch of these examples where this happens. I think the place where the Bitcoin community kind of draws the line in the sand is there are very specific applications where decentralization really matters, and Bitcoin is the most decentralized and the one most likely to get more decentralized over time. I think what you're saying is actually something different, which is the end user and also the developers in all of the other use cases where decentralization is not the most important thing, like with Bitcoin. Everyone just wants the best user experience, the cheapest fees, the highest throughput, et cetera, right?
Matt, they just want the application that they want, right? That's it.
Yeah, they want it to work. They want it to work, essentially.
Yeah, and they're willing to accept a certain level of risk that Bitcoiners may not be willing to accept because it might get a lower price. It might, okay, again, blood pressure goes up, lower price. Okay, I heard you already. But there'll be an application that's sold in a manner that they want to consume it, and that gets them to commit to what they're doing. And so if enough, there's a race going on. The whole foundation of the non-store value applications that everybody's mentioned is built on Lightning, correct? Lightning is the base for everything. So it's Lightning.
It's discrete log contracts, which are doing contracts for difference on the Bitcoin base chain right now, being able to actually have distributed futures markets with being able to create your own oracles on base chain, right? And as opposed to having it, so it's a little bit nuanced in that, but I'll let you keep on going. Like,
so more than one, right? So there's more than one application platform, right? But you're competing between those couple, Lightning and the others, with thousands. And there's so much money going into those thousands that it's being subsidized, right?
Just because the money's flowing into it doesn't mean that the capital is being allocated in a meaningful and smart way. So
you're right.
Like when I look at the amount of liquidity that's being pumped into this system and the malinvestment that's there and the zombie companies that exist on the planet right now, it's almost making your eyes bleed, right?
But
So
the flip side of that is, you said it doesn't mean that they're going to be successful. You're right. But it also doesn't mean they're not going to be successful.
no, and I agree with that. I agree with that. There might be. But my concern, Mark, is the order of events that are going to play out here, right? My opinion, which I suspect is very different than your opinion, is that the store of value is going to drive a wedge into the fixed income market and expose this quantitative easing that can't be turned off, that's now even being transmuted into UBI plus quantitative easing. And it's going to drive a wedge into that, and it's going to get to this point where people are saying, you know what? I'm not going to sign up for this bond contract that guarantees the loss of my nominal principal because it yields a negative rate, right? I think that we're at a breaking point with how far everything's been stretched in the fixed income space. And when you look at the size of that market, this is a $300 trillion market cap for fixed income around the world. 18 to 20 trillion of that being negative yielding debt already today, right? When we look at the market size of Bitcoin, it's a pittance. So now if you're sitting on a bond desk, right, and you got this massive amount of buying power, that has to go somewhere, and it has to go somewhere that you actually trust, right? Are you going to go to some protocol that's sort of somewhat decentralized, or are you going to go to something that hasn't changed a lick in a decade that has a 21 million fix, right? So the order of events is, I think, the part that you and I have a major disagreement on things progressing. On the other side of all this, right? Well, maybe some of this other stuff does pop out of it. Maybe there is a reason to have these decentralized contracts that now I don't go to Robinhood anymore, where I'm already getting free trades, and I go somewhere else, right? Maybe there's a desire for that, and there's a 10x advantage to move in that direction. But the 10x advantage I see today is the fixed income market is beyond repair.
Okay, so Preston, let me respond to that. What percentage of Yin's guys understand what nominal interest rates are?
Does it matter?
Yes.
Why?
For the same reason that people just keep on putting money into their savings accounts.
Yeah, but Mark, look what's happening right now. We got a 10-year treasury at 1.5%, and we got 6 months of CPI.
Preston,
we got 6 months of CPI prints at 5.5%, right? So now people are being incentivized to not even pay down their house. They're incentivized to take out a 100-year loan because they'll make a 300 basis point return by just having the loan itself.
And Preston,
yeah, but Preston, I think Mark's point is that we're operating in that world, assuming that there's financial education. Or you get remember, 45% of Americans don't even own an investment.
I don't think this thing called Bitcoin cares whether anybody understands it or not.
Yeah, no, I think Preston. So let me reframe. One of the ways to think about this is who own, like, the market volume is driven by larger players, and I think it was Preston maybe who was making this point earlier. If you think about the risk reward ratio and the classic capital markets line, all these asset allocators are being forced out of cash and bonds to take on more risk in equities, and they've all these endowment funds and things have gone into private equity and venture capital, not because that's a good place. It's because they need to do things like make that trade-off between illiquidity and in order to generate those returns. There's all kinds of analysis that comes out week after week by these research people that says, hey, you know what? In the 1980s, you could make 7.5%, which is like the return amount that all these endowments have just by investing in various debt instruments. And today, you need a mix of all kinds of different equities and things like that. So institutional investors, which control the vast majority of capital, are having these conversations. High net worth individuals, which control a ton of capital, are having these conversations. There's some crazy ratio of 10% of Americans own 80% of the stocks. So those really well-educated people who can move the market with investment decisions are definitely talking about things that Preston's talking about with the inflation. Even the people who aren't particularly educated on nominal interest rates and things like that, groceries are elevated 25% plus. The official government economist was on TV saying there's no inflation as long as you exclude the price of pork, beef, and chicken, which is what people care about. If you go to Home Depot, I had a project, all the shelves, they have a list of things that are missing from that shelf this week. So I think that some of these inflation concerns, they may sound conspiracy theory or Bitcoin maxi, but I think people are seeing it day to day now.
Here's what you're missing. Bitcoin's not the only alternative to solve those problems. And so all that money is not only looking at Bitcoin, but they're going through the same process that I do, right? Why do I like Ethereum and some of the L2s more than I like Bitcoin? Because I see the applications. And I had, again, with the same smart friend that I love talking about this stuff with, we had the same conversation. And he kind of came around and agreed with me. And what we discussed was, when you have a lot of applications that require a certain token in order to use those applications, that drives demand for the token. That's Ethereum. These, concept. This application, decentralized financial applications, decentralized insurance claim approval. There's so many different.
Mark. So I think the point that you're making is fair. There are decentralized types of financial infrastructure that could be built. Part of the whole take that I just didn't hear anyone bring it up, so I'm going to bring it up.
Wait.
The idea. Oh,
Let me.
Yeah. Sorry, go ahead.
Let me finish my point. what happens is when consumers and businesses are using these smart contract driven applications on other networks, Ethereum, Polygon, Optimistic, whatever it may be, they have to buy the tokens in order to use those applications. Consumers will have to do the same thing in order to use those applications. And that is going to create intrinsic demand for those tokens. The people who are making these decisions on trying to find alternatives to treasuries and trying to get more effective yield are going to see those trends. Well, if you go to markcuban.com and start to look at my investments, you'll see that I'm investing where there are applications, right? Because I think that those applications are going to drive a whole lot more utilization than what you're hoping Lightning does. And because of that, that's what creates the competition and risk for Bitcoin beyond store of value. Now, on the flip side, because all these other networks are doing these other applications are not trying to be pure store of values, even though they can be speculative, and a lot of these trading desks will buy them because they see the tokens as products, and as long as there's more demand than supply, the price will go up. There'll be some competition for Bitcoin there. But because Bitcoin is very limited in what Lightning Network can do and will be for at least the next couple years, that's going to work in Bitcoin's favor in terms of pricing.
Mark, you keep saying Bitcoin store of value. So how are you thinking about the remittance problem that has already been solved in El Salvador, where it's just swapping from fiat to Bitcoin rails back into whatever fiat they're wanting to use down in El Salvador? The person doesn't even know that they're using Bitcoin.
That's just one application that El Salvador chose to use. Great. But it's not like other applications, other platform networks can't do the exact same thing.
In an instant, they can't do that one.
But so Mark, the thing that I think that I just want to hear your take on this, I guess, is like, look, if we look at a company, one of the things we think about is what's the competitive moat, and then how sustainable is that moat. And so when you think about, for Bitcoin, it's kind of what is the monetary premium. So just like, hey, if you're looking at real estate in New York City, the price trades far above what the cap rate would be for like a small town in Ohio. So why can Manhattan real estate collect all this monetary premium that the small town in Ohio can't? Part of it is network effects. Part of it is, people know the supply is constrained. It's like kind of an island. And there's all these things that I think there's a similar analogy to be made with Bitcoin, where with Bitcoin, it's not going to change. With something like Ethereum, even the older Ethereum developers have just quit, or they've changed tack. All of a sudden, they've changed multiple times. They failed to deliver as a management team. There's all these things where they're failing, and then Bitcoin already works now as it is. So it's kind of like, this thing already works, so it makes sense.
Selling yourself. You're selling yourself, right? You're selling yourself. Consumers don't care. People in New York just want some place to live. And if they can get a place where the value goes up and it's a store of value, great. So while you're arguing about the recipe and how much butter should go into the brownie recipe, people are just tasting the brownies to see which ones they like best.
Yeah, and so you brought up the video games, and so like that just crystallized it for me. Okay, maybe I am selling myself. I'm definitely deep down the rabbit hole, so totally fair. But think about the total addressable market difference. That's the point that I was trying to make. Something like a Bitcoin is like global money. It can take the monetary premium from Manhattan real estate. Something like Axie Infinity, it's like EVE Online money. Or what is the market cap of the world?
You sound like Charles Harkin. You sound like the Cardano guys, right? Well, we're in Africa doing school stuff for children in Nigeria, right? There is no platform that doesn't have a story. Polygon talks about what they're doing in India, right, and in the United States. There's no platform that doesn't have an analogous story that you just brought up. Now, the difference is the finite, and there's even others
I'm saying that serious asset allocators are going to look at Bitcoin for fundamental reasons. I'm not talking about helping orphans. So I'm not trying to tug at heartstrings.
I agree. Look, as a store of value, and serious asset allocators are looking at it as a store of value. They don't give a shit about how much it's being used in El Salvador.
Mark, we're kind of getting all over the place here, but I'd really like to ask you, you seem to be someone that's very heavy on Ethereum, and you seem to feel very, very confident about its future. Doesn't it worry you at all that going from proof of work to proof of stake? Have you taken a deep analysis of why it's become so difficult for the Ethereum Foundation to find an exit plan here? Because they've pushed the difficulty bomb past multiple times now, and they haven't been able to find a solution to move from proof of work to proof of stake. I mean, as an investor, aren't you worried that this is kind of like showing that they're unable to get it done and unable to make the transition?
Not really, because I mean they implemented 1559, and there's L2s ready to pick up the slack.
And now the fees are
Yeah,
exploding.
okay, so, but Mark, ultimately they're trying to go to proof of stake, and they know that they need to go to proof of stake, but they've been unable to do that so far because they know that
but we can make. Let's go back to
problems.
2017. Let's go back to 2017 and all the arguments. Bitcoin went. How many times did it fork?
This is talking about a fundamental base layer
Once.
change. You're talking about changing making a very large change to the protocol, which will actually destroy the original chain. So when they drop
that was the same argument on
no, we're just talking about Ethereum right now. We're just talking about Ethereum.
I get it, but the point is, Bitcoin overcame it. And
no, Bitcoin has never gone through this kind of a change before, though. This is a pretty dramatic change. You're talking about rebuilding the plane.
We're talking about doing a beacon chain with 64 other blockchains that are going to, port itself into it. Like, this is like having an open heart surgery on the protocol.
And you know what? If they have to roll back and they can't, great. But at the same time, again, it's the brownie versus the recipe. I'm guessing that Vitalik will figure it out. That's a bet of mine.
That's a fun analogy. I mean, and that's interesting to say that Vitalik will figure it out, but they haven't been able to figure it out. Like, listen, like a lot of chains have started on proof of stake, and that's fine. That works for them. But moving from proof of work to proof, just real quick, I just want to finish. Moving from proof of work to proof of stake has proven to be extremely difficult.
Yes,
part of the reason is because what they're going to have to do is they're going to have to fire the miners. And in the recent past, they've treated the miners very poorly. They've gone from 5 ETH to 4 ETH to 3 ETH. So they've been cutting the pay of their security guards for a long time. Now they've done EIP 1559. They're burning the fees. As they get closer and closer to dropping the difficulty bomb, they're essentially saying to the miners, hey, we're about to fire you. We're about to let you go, just so you know in advance. Mark, I know you've had a lot of employees. Have you ever let any of your employees know that you're going to fire them 6 months in advance and continue to let them work the job?
Yeah, but isn't that kind of like having?
No, it's not like the having at all. It's not like the having at all.
ASICs, and you're going to have to buy new ASICs, and
it's not like the having at all. They're moving to validators, so they're completely
okay. So
that's
it's not a pure analogy, and it's not purely I know the difference between mining and proof of work and proof of stake, but
what's the difference?
Well, hold on, Mark. The halving is a preset. We know that's coming.
Yeah, you know it's
but what's the difference? No, hold on. But hold on. What's the difference between proof of work and proof of stake?
One has validators and one has miners, right? And so that's the difference. And you can put up money and become a validator, et cetera, et cetera. But the bigger point is that it's not just about mining, right? And it's not just about halving is coming. There's an ASIC war. And there's a war to keep on pushing the envelope in terms of the instruction set that is required to solve the problem. And that's not cheap.
But this is really getting away from ultimately the transitionary period. Like
to
get from proof of work to proof of stake, they'll have to difficulty bomb the entire proof of chain network.
I'm not arguing that it's a risk. I agree with you that it's a risk. You asked me if I understand that it's a risk. I agree with you that it's a risk. I think, so if they can't solve that, then maybe I'm 100% wrong. Okay, I've been wrong before. But if they can solve it, I'm 100% right.
Well, I hope they, have an opportunity to solve it, because a lot of people's money is going to be seriously at stake if they're unable to solve the transition.
But we're talking about the same type of risk proposition with Lightning.
No.
Lightning has been around for how long?
Totally wrong, Mark.
How long has Lightning been around?
Since 2017.
Been in production for.
And so how long has it taken for really to be put into production?
No, it's been in production for 4 years.
Right, but okay, so to really be put to use, because it hasn't been getting 4% week-to-week growth.
I can send you whatever you want right now.
Proof of stake isn't even a reality yet. I mean, you're talking about comparing something like Lightning Network, which has been in use and has been used by nation states.
You got a country that's using it as legal tender on the Lightning Network today.
Right, today, 4 years later. But at the same time, right, let's say Ethereum just screws the pooch. Okay, as I said earlier, not all of these networks are going to survive. There'll be someone else to take its place. I'll have lost my investment. Shit happens.
Yeah, I
Hey
mean
guys,
that was one of
I'm
the
gonna
things I was going to ask.
guys real quick. I gotta leave, but Mark, I just want to say thank you for coming up here. I know that
Yeah, I got to go
it's
too, guys. This has been an
one
adventure.
versus many. I'll see you guys later.
Hey, Mark, I appreciate you coming
Yeah,
up
Mark.
and
Yeah,
battling.
no, it was fun. Hey, it's
Yeah,
all. How many people are on this thing?
15,000.
Let's do it
15,000.
again.
So me versus 15,000. That's always fun.
Getting a lot of messages, Mark, that you held your own. Honestly, pretty impressed by your ability to come in here and speak amongst the Vipers. Yeah, Preston, thank you so much for trying to do this, put
Yeah,
this room together.
It was
yeah,
fun.
absolutely.
You
Mark,
guys,
thanks
hey
for
Preston,
making
you
time.
guys got to do this again sometime down the south side.
Thanks for coming on, Mark. My only gripe is stop talking about Dogecoin.
Yeah, it's a great introduction to cryptocurrency. I'll keep on talking about it.
No,
Never hear me talk
no.
about it as an investment.
Tell people to go start a full node.
Yeah,
Hey,
right.
Mark.
Yeah, because
Mark,
that's easy.
Mark, thank you for the back and forth. Enjoyed
It
it.
is.
Hopefully,
Thank
It
you.
is.
we
My
can
8-year-old
do it
son put
properly.
mine together.
All right. Well, my 11-year-old did Ethereum, so we're good. All right, guys, take care.
Hey, see
Thank
ya.
you. Take care. Bye.
See you, Mark. Appreciate it, man. Wow, Preston, that was cool.
I was not expecting that, Preston. That was incredible.
Yeah, it's good that he came on. I mean, I disagree with him so much. Most of it just
he
comes down to the
basically,
timing. Like, here's the thing. Like, he's saying, hey, this thing could go in many different directions. I want to own, a little bit of all this. And I mean, the guy's a billionaire and he wants to spread out his position size, right? That's how he's thinking about it. I think that his timing's off, right? Like, I really think that what we're seeing is a total catastrophe in fixed income due to the actions, decades and decades of actions with respect to the central banks, right? And so when you look at like what caused all of this quote unquote crypto to be stood up and to come to light, it was something that was searching a problem. Well, what was the problem? Well, it was the central bankers manipulating fixed income rates for decades, right? So that's why it came to be. So it comes into existence to solve that specific problem, to provide a 10x gain, 100x, 1000x gain to society, right? And then all these other things start like growing on the side of it, right? These other things can turn into something. We have no idea, right? But when I look at like the timeline of like how this is going to play out with, call it or $18 trillion worth of negative yielding bonds on the market, like they're pushing this thing straight off the cliff's edge. And all of that buying power, the $300 trillion in fixed income, is going to go somewhere. And let me tell you, it's going to go somewhere that people trust and that aren't concerned that whether they're going to be able to port 24 blockchains into a beacon chain that's moving to a new type of clearing mechanism and like all this other stuff. Like, it's not going there. I'm sorry. Like, I'm sorry. I just don't see that happening. Now, would some portion of it go there? Maybe. I don't know. But like, I'm not one that's going to try to, how does Greg Foss say it? You're too smart by a half or whatever. But like,
Too smart by a half. It's a rounding
too
error,
smart by a half. Like,
Preston.
keep
Rounding
it
error.
simple. Yeah, keep it simple. Like, you don't have to overthink this, right? This is all about decentralization and security, right? Like, it's the security of the buying power that it can't be lost. And so the faster that people figure that out,
he hasn't done the work. That's the problem. He hasn't done the work.
and he's just outsourcing. He's outsourcing that through position size of just spreading it out over everything, right? And if he's wrong about one thing, then he's like, whatever. But
yeah, I think that's the thing, Preston. It's like he's thinking of it as an investor and where can I allocate capital? Where can I get returns? Whereas
just like all these hedge funders.
Yeah, whereas a lot of people maybe in this room are thinking about, like, this is my fucking money. Like, what do I do to protect myself? So I don't think he's done the work.
But as soon as you start digging in on the technical of like how are they going to move from proof of work to proof of stake? Like, it just collapses, right? Like, he can't get into that conversation because he hasn't done the work.
Do you guys think he genuinely believes that people are not buying like large amounts of Dogecoin, or is he just kind of protecting himself by thinking people are only throwing $20 at it?
I think he's talking bullshit.
I have no idea. I just, if I was going to defend him, he likes to have fun, right? Like that's the persona that he has on TV, and whether that's what he's like in real life or not, I have no idea. But like he likes to have fun. He kept saying it's fun. People were just having fun with it. But I don't think that he realizes that there are a lot of people that are stuffing like significant amounts of their proportional wealth into that mess, right? And it's a disaster waiting to happen. I mean, look at the price action compared to Bitcoin over the last 4 or 5 months, right? Like you've lost a significant portion of your buying power if that's where you were at because you listened to Mark Cuban on Ellen. So like that's my issue, and that's why I poked him there at the end before we left. It's like, dude, stop talking about it. Like, do some homework here. You need to be trying to help the 8 million people or however many follow him.
Yeah, but really,
Dude,
it's
and so
homework on sound money that he needs to work on, right? Like the fundamental question whether an inflationary currency is something that he thinks can be used as a medium of exchange, or if a deflationary sound store of value can be used as a medium of exchange as well. Like if you don't start there, then the second order effects of all this technology don't even make any difference.
Yeah, and so the thing that Preston is talking about for folks in the audience about like, hey, what's happening with the fixed income world. I think the reason that's important is basically I try to make this point, but like in the past, you could have money in a savings account and you would be good. It would like help towards your retirement. Now the returns on your savings account is like 0.5%. So you're losing money because they're printing so much money. They're printing more than that 0.5%. So what's happening for these like really large funds is they're moving into riskier and riskier stuff just so they can meet those return hurdles of like call it 8%, 7%, so that they can pay out their retirees. The thing is, even for the smaller folks, like they're seeing the same thing. When you see people buying lottery tickets, what you're seeing is people who aren't doing math, they're not being rational, they're just looking for some crazy risk return ratio where maybe they can think about actually meeting their retirement needs. And so it's, that's when you see like, college students buying meme stocks and stuff. It's the same kind of concept for the bigger investors and for the smaller investors. And like, that's not a sustainable way to run a society. Whereas I think something like Bitcoin kind of is.
I don't have anything else. Rob, you have the room here if you want to keep it rolling, and I can hand it off to anybody else if they want to keep chatting. But I'm going to head out.
I'd be happy to boost up another room if Rob wants to join me as well. Happy to keep things rolling.
So Preston, thank you. For everyone in the audience, I kept basically a no invite policy, Preston, because this was kind of your fight in your room. I wasn't trying to crowd